Hey everyone, welcome back to Corporate Decoder. Today, Cheniere Energy Incorporated just filed an 8K report announcing a significant debt offering, and I'm seeing a few key financial moves at play. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is raising $1 billion and what they plan to do with that money. It tells a big story about their financial health and future plans. Alright, let's get straight into this Form 8K filing from Cheniere Energy Incorporated. This is a report companies file when something significant happens that shareholders need to know about quickly. On May 26, 2026, the company, through its subsidiary Energy Partners LP, announced they entered into a purchase agreement. What does this purchase agreement mean? Well, it is essentially a deal for Cheniere Partners to issue and sell a lot of debt to investors. They are selling two types of notes, basically loans with specific interest rates and repayment dates. They are issuing 5.350% senior notes due 2036. These are for $1 billion. Think of it as borrowing $1 billion that they will pay back in 2036 and have to pay 5.350% interest on each year. Then they are also issuing 6.050% senior notes due 2056 for $750 million. This is another loan for $750 million due in 2056 with a slightly higher interest rate of 6.050%. So in total, Cheniere is raising $1.75 billion through these debt offerings. The company is saying these notes are being issued at a price very close to their face value. For the 2036 notes, it is 99.511% of the par value, and for the 2056 notes, it is 99.698% of the par value. This essentially means the interest rates are pretty much the stated rates, and they are getting almost the full amount they are borrowing. This purchase agreement is pretty standard. It includes the usual promises, conditions, and promises to pay if something goes wrong. Now, the company also issued some press releases about this offering, one announcing the intent to offer the notes, and another announcing that they have priced the offering. This means they have set the final terms, including the interest rates and amounts. This is where it gets really interesting. Cheniere Partners is not just borrowing money, they are also using some of this new money to pay off existing debt. Specifically, Sabine Pass Liquefaction LLC, which is a part of Cheniere Partners, is redeeming or paying off $1.5 billion of its outstanding 5.00% senior secured notes that were due in 2027. They are calling these notes back early. The exact way they are calculating the redemption price is a bit complex, but essentially it involves the principal amount plus any interest owed and a premium based on current market interest rates. They are planning to use the money they just raised from selling the new notes and some of their own cash to make this redemption. So they are essentially swapping out higher cost or shorter term debt for longer term debt with different interest rates. This is a strategic financial move. They are retiring $1.5 billion of debt that was due in 2027 and replacing it with $1.75 billion of debt due in 2036 and 2056. This means they are extending their debt maturity profile, pushing payouts further into the future, and they are also increasing their total debt slightly, but with different interest rates. The 2027 notes had a 5.00% rate. The new notes have a 5.350 and 6.050% rate. So they are paying more interest on the new debt, but they have much longer to repay it. This can be a good move if they expect interest rates to rise further in the future, or if they need the cash flow flexibility for other investments. What we are seeing here is Cheniere actively managing its balance sheet. With a market cap of over $48 billion and a PE ratio around 39. This is a significant company in the energy midstream sector. They are still one of the top LNG stocks and have recently raised their full year financial guidance. The filing also includes a list of exhibits, which are the actual legal documents related to this deal. These include the purchase agreement itself and the press releases we just discussed. The report is signed by Zach Davis, the Executive Vice President and Chief Financial Officer. This indicates this is a significant financial transaction sanctioned at the highest levels of the company. Looking at the broader context, Cheniere Energy is navigating a complex energy market. They are a major player in liquefied natural gas, and their ability to secure financing at these rates and manage their debt effectively is crucial for their continued growth. By swapping out shorter term debt for longer term debt, they are likely aiming for more financial stability and predictability. This debt issuance for $1.75 billion is a substantial move that will impact their financial structure for years to come. The fact that they are simultaneously redeeming existing debt suggests a deliberate strategy to optimize their capital structure. They are effectively refinancing a large chunk of their obligations to align with their long-term outlook. This kind of move can free up cash flow in the short term by eliminating those 2027 debt payments, allowing them to potentially reinvest in their operations or fund other growth initiatives. On the flip side, they are taking on more debt and at higher interest rates overall, though, spread over a much longer period. The key question will be how effectively they can utilize the capital raised and whether the longer maturity of the new debt provides the flexibility they need to navigate future market conditions. I am particularly interested in how this impacts their leverage ratios and their overall ability to service this new debt over the next decade and beyond. It is a bold financial maneuver, and we will be watching closely to see how it plays out. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please like this video and subscribe for more. We have a Discord community linked in the description too.